Hello everyone, how are you doing today? This will be a short breakdown of Monday's price action from the US dollar versus the Japanese yen, but fully packed with gems that will surprise you. The IDR Basics acted perfectly to read the overall market structure in the most accurate way possible, and everything unfolded so beautifully throughout the whole trading day. Let's start with the aftermarket and overnight DR session. The overnight DR session has not confirmed any direction yet, but it's already giving early signs of a possible DR downside model formation based on where it has formed. We would be very selective with targets if a long confirmation happens. Why? Because we have the ADR low, mid and high as barriers in a downside model. If the ADR mid gets breached, the probability of a DR downside model would decrease, which would increase the probability of seeing a trumpet-like price action throughout the day. If the ADR high gets breached, the DR downside model would be broken, which would increase the probability of seeing a trumpet-like price action throughout the day by a lot. 10 minutes later, price confirms into the short direction, which is in this constellation positive for the DR downside model continuation. Let's zoom out to access older DR sessions. Why do you think the overnight DR session didn't confirm into the long direction or had a hard time to go higher? With all the previous DR session levels highlighted, we have a clear picture of where price came from. Let's focus on one in particular and zoom into the current overnight DR session. 1, 2, 3, 4, 5, 6, 7, 8 candles were rejecting this previous DR session level and failed to close above it before confirming into the short direction. That is the Algo giving multiple signals that the DR downside model is intact and should continue. Whether you trade Forex, futures, commodities, or any other asset, DR levels will always remain important for the algo. If you want to learn much more about how the market algorithm operates and how you can predict certain moves with a very high probability, then think about joining my M7DR Academy, where I share a lot of other insights that the retail space has never seen before. So the overnight DR session has confirmed shorts, and therefore we want to trade into this direction. Based on statistics, short confirmations on Monday have a 72.4 probability of turning into a DR true session and a 27.6 probability to turn into a DR false session. If a short confirmation happens in the first 30 minutes after the overnight DR session has formed, the 2 standard deviation level has been reached around 65% historically, and 2.7 were reached 50% historically. With 2 rejections from the IDR low, price offers your first opportunity. Why? You have a clear DR downside model intact, a short confirmation, the algo clearly wants to price down, you have IDR low rejections, and the previous day's RDR highs. An entry anywhere in this area offers a potential 5R trade if you go for the 2 standard deviation level that has been reached almost 70% historically under these circumstances. Price breaks through the previous day's RDR high levels and reaches not only the target but also more than 3 standard deviations. That's a very basic DR trade that could have been taken even without access to historical data for a minimum of 3R profit. Fast forward to the regular DR session. It confirmed longs a little bit later in the session at 12 p.m. and currently following price action is presented. If a retracement happens now back into the defining range, would you feel comfortable taking a long trade? If your answer is no, you're on a good path. Let me explain why. Price is respecting the overnight DR session low multiple times and therefore also the DR downside model structure that has been strongly present in the previous sessions. Thinking about a possible long trade would make sense only if price would breach the overnight DR session mid. This would decrease the probabilities of a DR downside model and increase the probability of seeing a trumpet-like price action for the rest of the day. A break above the ODR high would completely invalidate the DR downside model and make a long trade even more favorable for the rest of the session. At the end of the day, price respected the DR downside model structure and returned back into the regular defining range to close there. There's a good lesson in there. You don't necessarily need to trade every confirmation. Not every confirmation is a guarantee of continued moves into the direction. Sometimes it's important to step back and analyze what has happened before. If you enjoyed this in-depth breakdown and want me to make more of those, then like the video and let me know it in the comments. Have a good trading week, and I hope to see you in the next one. We're gonna take on the world.